Futures trading involves substantial risk of loss and may not be suitable for all investors.
Good morning. It's Wednesday, April 3rd. Not so liberating. So I've been worked out 4 a.m. to 7 p.m. shifts since the COVID volatility. And if you're trading the ETFs and the miners, really your hands are tied. I'm seeing a lot of activity right now with silver futures down about $2 at 32.60. A lot of the online traders are active in the markets right now, and that's the benefit of the futures contracts is nearly this 24-hour access in these markets. So yesterday I laid out the game plan. I told you that I would short-term trade until the event and then sit back and watch, and that's exactly what I did. No sense on trying to be a hero on trading what some of the inaccurate news statements that came out saying that it was just a blanket 10% tariff on all the imports here, and what happened to be a much more comprehensive plan that was laid out. And that's the reason why you saw equities and everything else go up, and then they flushed out, and it was just a buy the rumor, sell the facts. So thanks for joining me. I'm Philip Streible, Chief Market Strategist at Blue Line Futures. So with this dramatic sell-off and this move, I'm going to update the chart pack with the levels of interest and a long-term support on gold, silver, platinum, palladium, copper. So if you haven't done so, register using the link below in the description, and I'll send that out shortly after the open. So President Trump, he imposed steep tariffs on all exporters to the U.S. with some higher duties on 60 nations, which is to counter the large trade imbalances. So the move had sparked threats of retaliation from the other countries, including China and the European Union, and that is what led the sell-off in the global market. So the tariffs are expected to lead to higher U.S. prices, slower growth, and could even trigger this recession talk. So Goldman Sachs, they upped their expectations of a recession to 35%, JP Morgan 40%. So this could shave as much as 1.5% off U.S. economic growth this year. So several Fed officials had warned this week about the potential impact on the economy. Now, what the key event that I'm going to be watching here today, and I suggest that you all tune into it, is going to be Fed Chairman Jerome Powell. He's going to speak later on today. Now, as far as interest rate cuts are concerned and things like that, that's where we're going to want to start monitoring. Is it just 2? Is it going to be 3? Is it going to be 4 or 5? Who knows? Will this drive up inflation and the Fed is handcuffed? So we really want to see and digest what some of the statements coming out here from Fed officials coming up in the next weeks here as these markets are in turmoil at the moment. So looking at an equities data check, many of you have put options in the U.S. equities. Bear put spreads in the S&P 500 reduced quite a few positions on that rally up to the 50% retracement from the sell-off on up to from high to low, and then we bounce back up. I outlined that on a premium chart pack here covering the equities and some of the other markets. So looking at U.S. equities, you have the S&P 500 down 200 points. That's 3.4%. You got the NASDAQ down 767 points. It was down about 1,000 at one point. The Dow down 1,200, the Russell down 96, and the FANGs are down 470 at the moment here. So if you're trading in the U.S. equity markets, what you want to see is 5,500 to 5,470 really hold for a relief rally back up to about 5,550. That's just the observation, but that's the way I'm going to look at these markets here later today. Now, the general commodities, we're seeing oil, industrial metals, and grains are all falling due to the tariff increases, which may continue to hurt the global demand for raw materials. It's the retaliation that's the biggest concern, with commodities such as soybeans, cotton, copper, all falling because of the broad hit to consumption. China vows to retaliate against Donald Trump's new tariffs, which raises the average U.S. tariff to China to 54 to about 65%, and they are urging the U.S. to immediately cancel the tariffs. So the tariffs are expected to shrink Chinese exports to the U.S. by about 80% this year, which results into a 1 to 2% hit against Chinese growth. So remember, they had a 5% growth target, and as their growth was growing, we saw commodities like crude oil, copper, some of the grains, some of the silver all rallying on that. Now, looking at the overnight price action in the grain markets, you're seeing corn, wheat, soybean futures all falling because of the fact that there's concerns for what the demand will be for American crops. Crude oil, I told you yesterday in the video, I was going to be reducing positions and getting defensive and looking at put spreads. You got crude oil futures down $3.33 here in the overnight session. So the tariffs are bad for crude oil demand expectations, with that combined 54% tariff on the Chinese exports being just brutal on their particular market and their economy. So looking at the precious metals overnight, so the White House exempted metals including steel, aluminum, copper, and gold, and that's why I think you got gold futures under a little bit of pressure. You got copper futures under a bit of pressure, and it provides some relief to the domestic buyers and avoids this potential price dislocation that a lot of these markets and these metals were playing against. So gold futures yesterday did surge to an all-time high. This was just after the announcement here to 3201.60 on the June futures contract, and that was later reversed, and we've got a dip on gold down about 1.1%. So silver down about 5.5% at $1.92 lower, and the gold silver ratio jumping up to about 95-96 to 1 here. Remember, gold has been up about 20% this year, so the question is, how will central banks and investors respond to the dip here in prices? Remember, the main drivers have been central bank buying, ETF accumulation, and then potential allocations to Chinese insurance firms. So if Chinese insurance firms are all of a sudden allocating 1%, you see the ETF flows continue, that's where you could see prices start to head higher. So the exchange traded funds yesterday, they cut 54,000 ounces of gold in their holdings in the latest trading session. A lot of people, a lot of traders that I'm working with were trimming positions coming into that announcement and shortly after that announcement, because there was a lot of moving parts going on and there was no question as to what the overnight price action would bring. Remember, most of the all-time highs in the gold market has been due to overnight price action, and we can see overnight this broad-based liquidation with prices coming off a bit. On the ETF side, they trimmed 447,000 ounces of silver yesterday. So the year-to-date changes, very little change because of the amount of trimming that's going on. Still up 6.2% on gold, still up about 0.5% on silver, but the gold ratio is sitting at 96 to 1. So I will be sending out updated and refreshed tactical ranges in this market here. So I've got to do some tweaks to the algorithm to adjust to this surge in volatility here. And then I'll also be looking at what are those key levels for adding positions here. Many of you have been sitting on the sidelines. We've been sitting in large cash positions. We've been using stop losses, put options. Remember, 90% of commodity trading and most trading in general is implementing proper risk management, implementing proper emotional discipline, using thought and thinking rather than emotions in your trading decisions. So you got any questions, futures options trading, shoot an email over to us, give the trade desk a call, and remember that futures and option trading, it does involve risk of loss, and it may not be suitable to all investors. Good luck, good trading, go get them.